Good evening, all. Ira Epstein, and here we are with your financial market update. And this update is for the evening of Wednesday, the 11th of June, 2025, getting on about 6:40 p.m. Central Time. You know, the markets were higher in the stock market. Everything was beautiful. And as the day wore on after the noon session, the market started rolling over. I think a large part of it had to do with the fact that the word broke at about that time that the embassy, the U.S. Embassy in Iraq, they had told personnel they wanted to strip down and start evacuating unneeded personnel. And in fact, they're telling dependents of people in embassies throughout the Middle East that it might be time that they step back and go to a safer place. It in part started with the Iranian foreign minister, I believe it is, who said that, Iran's prepared to attack. They know where all the U.S. targets should be. They know how to go get them. And, he followed it up saying, if we're attacked, because they have a meeting going into this weekend. And the meeting is with the U.S. on the nuclear treaty. And I think everybody's worn out from it. I give credit to President Putin for keeping his word. He said to President Trump that he would make an overture to Iran about the nuclear material that Iran is holding. He offered to hold it. He offered to take it and process what they have and then dole it back to them so they could do away with that and yet continue for their commercial development. I don't think anybody on this planet believes that Iran wants to just do commercial development. I think without question, they want a nuclear weapon. They want to be a big boy in the region. That's not going to happen, and maybe we're at that inflection point now that the people are being moved from embassies and a talk is coming up. So that hit the stock market. It took gold and flipped it around, kicked it right back up. Silver came off its lows and rallied a little bit as well. You kicked up as well the energy prices because, as you know, if the U.S. hits, we don't know if it's just going to be hitting Israel if they hit or other people join in. What will they hit? Well, we know to be the facilities that everybody knows about for the nuclear development if they can get to them, but that oil's out there, and that's a way to really cripple financially what Iran is all about, which is to a degree, and I'm not talking the people. I want you to listen carefully. The government is different than the people. And the government is basically just wants to eliminate Israel and run the Middle East. Couldn't be simpler. All right. And it is simple. Now, when we look at data, we also had data. The CPI numbers came out. You saw the stock market rally on it. So it had to be something else. Either the market tired of that, or the market's looking at this, the PPI, and saying, I heard analysts do say this today, the PPI is more important than the CPI. That's what they were saying. And we're looking for up 0.2 on the month over month, and the core PPI up 0.3. That's not declining, folks. That's going up. The big question for everyone is where is the impact from the tariffs? It's now 4 months. Are we not going to see it? Did we, to a degree, offset that with all the tariff money that's being collected? Has the economy slowed down? We're not seeing that part of it. So this is getting interesting. Where is that? We're going to get weekly jobless claims coming out tomorrow. They're not looking for much of a change from last week. EI natural gas storage report, and the weather is getting warmer. And yet natural gas fell today. And I think it fell because they're looking for another increase there of over 100,000 billion cubic feet. You normally get this time of year about 87,000 billion cubic feet. So we'll see what happens. Treasury Department running out of money. It's really that simple. Scott Bessent was on Capitol Hill. How he did it, I don't know. He was there all day between different committees testifying. Where does the man sleep? And he seemed fresh, but he made it clear that he wouldn't let him pin him down. He said, this summer, we will run out of money at the end of the summer. Now, end of the summer, because it's July, August, I don't know. But we're coming to it. Isn't it funny? We're already going to be talking fall pretty soon. So what happens? Well, you know that come July 4th, what we need to see is something out of the Senate with some package they can accept that'll go back to the House and then be argued. What else? He talked about the U.S.-Chinese trade deal Besant today, and Lutnick did, and they claim, I took out of the whole thing, forget China and the U.S., all they did is get back to where they were a month ago and figuring out a framework to do that. And I'm going to repeat, China has the upper hand with the rare earths, period. And in order to get what we need, you've got to do deals. I even heard people saying go to Brazil and do some deals there for the U.S. You got to lock up rare earths in some manner. But the big question, of course, is going to be on all this, the tariffs coming right at us on July 9th. It's now less than a month away, and only 18 countries have made, according to Scott Bessent, deals that they consider good. Now, how do I say only 18? He said they have 18 proposals that they think will go ahead with. Well, what about all the other countries? That's how I view it. Remember, he told every country to give their best bid last Wednesday. Only 18. Okay? So that's the way to look at it. All right. So when we come to the markets, let's go here. On the S&P, you can see you're still up, and you're up for the week, nothing. You're up on a weekly basis, 0.25%. When we take a look at the daily charts, you can see how the market has come all the way here from that April low, and it's run out of steam temporarily. I'm sure the fact that I'm saying this means the market will go up and hit the contract high right away. But it has. The ranges have narrowed in. It's looking for something to make a move off of. That's how I'm viewing what's going on. The pattern is absolutely still bullish. Higher lows, higher highs. You're over still the key moving averages. That part is bullish, so I've got the bias up. I have the trend up off the swing line, and the market's over all the key moving averages. But what keeps thwarting the rally is the upper Bollinger Band. You can see that. That began a week ago, and it's still going at this point. And the momentum is embedded. So on record, until this number closes under 79, there's no reason you can't go for that contract high. None whatsoever. So do I see any reason to be short? Absolutely not. I want to be clear on that. In the NASDAQ, it's the same story. Here's your contract high. Should have done that in green, I guess, for you. But I'm looking at that. It's running the same way, fully embedded reading. Until it loses that embedded reading, I'm in the bull camp. When we come to the Dow, I did this one right. I did it in green. And it's not embedded yet. And it keeps getting thrown back at the 200-day average, this thinner gray line with the black dashed line, which are the Bollinger Bands. But the trends in all three to the upside, you've got two of the three embedded. And the laggard is still, in my opinion, the Russell. It is not embedding yet. It could. You've got both numbers over 80, that is for certain. During Wednesday, both were over 80, and both were over 80 the day before. But I want you to look. If the market drops much more than this, it can get under that 79 figure. I'm going to stick with what I know. Eventually, there will be a time to be long this, but the other indices outperform, and it's the first one that generally turns down on you right now. It has to do with interest rates. In the DAX, once you lost the embedded reading right here, when this line, the red, got itself and came, let me show it to you. This is the embedded reading, and once you lost it, my goal was it would make a run for the 18-day average. It all happened basically on the same day. I mean, I could make that argument real easy, but notice it isn't leaving that area. Today it got all of 8 ticks away from hitting the number. We'll see what it can do. In my theory is it should still hit it. And no, I'm not as bullish as I was. The bias is up, the trend is up, but momentum is pointing down. And I believe momentum leads price. Price doesn't lead momentum. When we get to the 30-year bond, you have a huge outside day to the upside. So that came about out of nowhere. And now the question is, do we take out that low on Thursday or Friday? If you don't take it out Thursday or Friday, let's assume the market just hangs near unchanged, then the Bollinger Band target is realistic, but you're in overbought territory. You already have a 70 reading. In the 5-year note, you have no trend at all. You were coming down, and with the outside day up today, and notice the market made a run, got right by the lower Bollinger Band. It's not going to change because I made a change up there. And it held that zone. It did that if you take a look at the 2-year, the 10-year. They're all in that same thing. The 30 is the most interesting, though. When you take a look at the dollar index, if you get through this low here, 90, I think it's 97.68, get nervous. If you start embedding to the bear side with it, get real nervous, because that means that anything priced in dollars is going to be instantly worth more money. You want to own the good, not the U.S. dollar. And those goods become worth more money, the dollar becomes worth less. In the eurocurrency, you're back up to the upper Bollinger Band. You're overbought. I can't make an argument to do anything in the market. It is in an uptrend. In the British pound, all that I saw was a correction back to the 18-day average, neutral. You've got the swing line down, but you have the bias up, and you've corrected and are correcting, present tense, an overbought condition. You got to get those numbers under 70 for me to think new money's going to get thrown at the market. We've talked about Bitcoin. I wouldn't be surprised if it wants to go back and hang at that 18-day average, but I see this market moving higher. I see it basing here and forming a base to go higher, not the opposite. And the reason is, how much fresh Bitcoin, do you think comes on the market on any given point in time? It's not a lot. I heard yesterday on CNBC somebody say it's like $50 million. Heck, it's bought up like that because you get a lot of these places, these different funds that buy it and they just take it off the market. They're going to hold it as an investment. Now, how do you trade it if you want it? You got to chase it. And that was how it was created. It was meant to be a scarce commodity in part. When we look at Brent, you're up to the 200-day average. I'm not convinced this is a demand-driven market. I'm convinced this is a supply issue and a war issue. Two at the same time. Even the EU, remember I mentioned yesterday, they're throwing sanctions on Russia, oil and natural gas. They're changing the cap price to $45. Now you've got, once you're clearing embassies out, something is getting ready to happen by the U.S. You don't just clear them out for no reason. Again, that could be the Iran strike. We don't know what's going to happen. I don't see anyone coming to Iran's defense but the Houthis. And that's about it. And I think the U.S. has enough presence there if they're going to carry it. They must know what they're doing with Israel. I'm not a military guy. You read and you learn. That's about it. In the crude, look how strong WTI is, trying to give you the embedded reading. Would I ever tell you, if you've watched me, to buy over a Bollinger Band? It isn't going to happen. And that doesn't mean you can't go from there to there. But only 5% of the time do you stay over that Bollinger Band or under it. And what happens inevitably is you pull it like a rubber band and kabang, it bites you. I'd rather come in on the brakes. Can't make it clear. I was just talking to you that I liked gasoline again. We were just talking about it. And when I said the dilemma is, the way the chart is, if you bought it there, your risk is pretty big back to the 202 level. But it worked. And now the chart that I'm watching, nat gas, all right? It needs to see that 85, 90, 95 degree weather just set in and be day after day. And when that happens, the first hot spell probably kicks it up. But again, I have been a bear for a long time, as you know, and my clients will tell you they had that round of trade. So let's see what happens. But as I talk all this trade, remember, if you go with us, and you go to our website at iraepstein.com, all you need to do at that point in time is look at the free offers on the left. If you want my research, where I specifically say I want you to buy here, sell here, here's the stop, here's the profit objective, and I track each and every trade from the day it gets filled via my recommendation till we get stopped out, loss, winner, whatever it is. And I show you exactly what's happening as close to real time as I can, because I put this out twice a day in my written updates, and I put it out also in full video in the morning, and you get that in the research. So courses, research, free offerings, iraepstein.com. Visit us. I'm Ira. I'll catch you in the morning as we talk PPI. Take care.